Hello and welcome to the in-news series of Drishti IAS. I am Pooja Divedi, and in this segment today we are going to talk about the Lakshmi Vilas Bank crisis. This topic is important from the perspective of prelims as well as GS mains papers. So let's begin by seeing the topics of discussion step by step. The first and foremost, why in news? We will talk about the timeline of the crisis of the event for Lakshmi Vilas Bank. We will also try to understand the reasons for the moratorium as well as the impacts on the general populace. We will talk about reasons for the ailing banking sectors in general. We will also talk about government schemes and interventions to revive the entire banking structure. And we will talk about the way forward. And in the midst of the entire segment, I'm not going to ask you just one but few prelims-based questions for which if you know the answer, you can comment in the comment box. So let's begin by seeing why in news. Because the central government has put moratorium on a Chennai-based private sector lender by the name of Lakshmi Vilas Bank, and it made this decision basing on the application made by the Reserve Bank of India. The moratorium will be functional till December 16, 2020, and this move was announced by an order issued by the Ministry of Finance. All right, and also until then, the bank will not be allowed to make payment which is exceeding rupees 25,000 prior getting confirmation by the Reserve Bank of India. All right. Also, Lakshmi Vilas Bank operates in the retail, mid-market and corporate space, and it has a sizable amount of presence. Now let's talk about the timeline of the entire event. What went wrong? In the last 2 years, we saw the debacle around Yes Bank and also the PMC Bank. And now the LVB. Trouble for LVB started after it shifted its focus from small-medium enterprise to large corporates since the year 16 and 17. How? It loaned rupees 720 crore to Malvinder Singh and Shivinder Singh, who were former promoters of the pharma major Ranbaxy and Fortis Healthcare, and that turned out to be bad loans. And in the year 2018, Religare Finvest, it sued a Delhi branch of the LVB to recover fixed deposits worth about rupees 800 crore that the bank invoked to recover loan given to the Singh brothers. All right, then comes after the case. The case was filed. After the case was filed, the RBI put LVB under prompt corrective action. We will talk about it at a later stage. It put it under prompt corrective action in September 2019, and under that the bank was not able to issue fresh loans and even open a new branch anywhere. So in the 93rd annual general meeting of the bank, the shareholders who were not happy with the entire fiscal shape of the bank, they voted against most of the senior members of the management, including the interim MD and CEO S. Sundar. So what happened? On 17 November, the RBI, in consultation with the central government, has superseded the board of directors of the particular bank. And T.N. Manoharan, the former non-executive chairman of the Canara Bank, has been appointed as the administrator of the bank right now. Moving towards how is RBI empowered to take such a move? So it's empowered under section 2 of the section 45 of the Banking Regulation Act of 1949, and under this, the central government, after considering the application made by the RBI under subsection 1 of that particular act, has made this order of moratorium in respect of the Lakshmi Vilas Bank Limited. Under the section 45 of the Banking Regulation Act, if RBI is satisfied that there are conditions which need to get attention, they can take the particular step. And under that, the RBI may prepare a scheme for reconstruction of the banking company or even for the amalgamation of the banking company. All right. Now let's talk about the reasons for the moratorium. So the prompt corrective action which it was put under is a framework due to sharp rise in the non-performing assets first, secondly, insufficient liquidity to manage risks, and negative returns on any asset for 2 consecutive years. If we talk about prompt corrective action, it was launched in the year 2002 by RBI. And it has a proper structure for it. It is a structured early intervention mechanisms for banks which are in poor condition due to erosion of profits or poor asset quality. So this is prompt corrective action. Under this, the RBI can put restrictions on a certain bank to stop distribution or dividend or expansion. And in severe cases like LVB is under, in severe cases, it can also go for restructuring of the entire banking system related to the bank. It can go for even winding of the bank and amalgamation, like it has happened right now. So the bank, which has this particular bank, it has dangerously high NPA level and a negative capital adequacy ratio in the quarter 2, and the net losses are pegged at rupees 396.99 crores. Now, to make matters worse, the auditor rang the alarm bell. The auditor said that in the normal course of time, this bank would have discharged its duty, but in the COVID-19 era, the discharge of the duty is possible or not, it's not very certain. And then it made the things worse. Moving towards the impacts. What are going to be the impacts of this particular decision on the particular fiasco? So whenever such things happen, it strikes at the core of the economy. That means the confidence of the people is pretty eroded, because the people already have a very low confidence in the economy right now. The people who did not believe in the banking system, who kept their money safe under the mattress, already lost it because of demonetization, and then comes this. So every crisis strikes at the root of the economy, the confidence. But this problem is not very large. How? The RBI also has a draft merger plan to rescue the particular lender. How? The draft scheme said Lakshmi Vilas Bank will be merged with the Indian unit of Singapore's DBS. That means the DBS Bank India Limited. Now it is being merged. Alright, what are the benefits of the merger? I am going to tell you the benefits. You have to answer in the comment section about 3 disadvantages of the merger. It helps to reduce the cost of operation. Alright, it helps to improve the professional standards. It also provides better efficiency, and as multiple posts get abolished, it gives a lot of financial savings as well. And it improves risk management, and it helps the geographically concentrated, any particular bank which is geographically concentrated, to diversify its presence across the country and to expand its operation. Now in the comment section, please tell me what are the disadvantages of merger. Alright, now let's move forward. What is in general ailing the Indian banks? First of all, it's the NPAs, the non-performing assets, the bad loans which are not getting serviced. It's a chronic and deep problem that has been infesting the entire banking industry. If we talk about the recent financial stability report of RBI, financial stability report, it has said that due to the pressure put down by the lockdown and the COVID-19 pandemic, the bad debts, the NPAs, could rise to all 20-year all high. That's a big problem. That means it has pegged the NPAs to be 14.7% of the loans, and it will be there till March 2021. And then we talk about, I have to rub this first. And then if we talk about the twin balance sheet problem, which was thoroughly discussed in the economic survey of 2017 and 18, the twin balance sheet problem has become a 4 balance sheet problem. The twin balance sheet problem is basically the problems which are related to the infrastructure and the banking industry. But the 4 balance sheet problem also includes infrastructure. I'm just going to write infra here, plus banking, plus NBFC, the falling down of the glorious ILFS crisis, if you remember, and also the real estate sector. So there is a spillover effect. The problems of one sector's balance sheets moves on to the next, and so on. So in a report, in a paper which was published by Arvind Subramaniam in the year 2020 of the month of January, he talked about the 4 balance sheet problem. And the four balance sheet problem obviously has its genesis in the twin balance sheet problem. And he said that this is a very deep-rooted problem. It needs to get addressed. All right. So competition from NBFCs. NBFCs, which are not regulated under the Banking Regulations Act, but the Companies Act of 1956, are working in the field of providing loans and advances. They don't accept deposits. So these particular NBFCs provide loans at a very attractive interest rate. So people are moving from banks towards the NBFCs. Let's talk about bureaucratization. What is this basically? This is indeed the result of nationalization. The smooth functioning of the entire banking industry is infested by red tapeism, long delays, lack of initiatives, and failure to take quick decisions. All right, this is also a very deep problem for the banking industry. Now let's talk about advanced to priority sectors. What are priority sectors? If we talk about priority sectors are those sectors which are very important for the development of the economy, of which the development, if occurs, will help in the overall development of the economy. So priority sectors, according to the RBI circular of 2016, are 8 in number. I'm going to name 3, you have to tell me the rest. First is agriculture, second is MSMEs, and third is infrastructure. So banks generally don't like to give loans to the priority sectors, but even if they do, it's very hard for them to recover it back. And this is because of, this is attributable to the poor and unsatisfactory loan recovery rates from sectors such as agriculture and other small sectors. Failure of rural banks. Rural banks have been a big failure if it comes to inclusion of the people, because people in the village area are very happy with their traditional banking system. They are very happily dependent on the money lenders and the barter system. They don't want to get into the hassles of the entire banking system. So that is also an issue here. Political pressure, as we all know, because of nationalization, public sector banks are having this problem of constant political pressure. So these are the various problems which I discussed with you, which affects banking as a whole. All right. Now let's talk about the problems have solutions. The Mission Indradhanush, we are going to talk about all the schemes in the broad light of Mission Indradhanush. Mission Indradhanush was launched in the year 2015 to overhaul the entire public sector banks. Okay. So we are going to discuss some schemes and steps in step-by-step direction. If we talk about appointments, the government has decided to separate the post of chairman and managing director, and there would be another person who would be appointed as the executive chairman of public sector bank. This approach has been based on the global best practices and as per the guidelines of the Companies Act to ensure appropriate checks and balances. Now let's talk about the Bank Board Bureau. If we talk about the Bank Board Bureau, it was established in the year 2016. Please tell me who was the first ever chairman of Bank Board Bureau. So the Bank Board Bureau will be a body of eminent professionals and officials which replace the Appointments Board for appointment of whole-time directors as well as non-executive chairmen of PSBs. They will also constantly engage with the board of directors of different PSBs in order to strategize and to think of their growth and development, which are very specific to each and every bank. All right. Now let's move forward and talk about capitalization. If we talk about capitalization and recapitalization, it is the infusion of money in the banking industry in order for the PSBs to maintain their capital adequacy ratios. So in the budget of 2019, recapitalization of rupees 70,000 crores was announced for the PSBs to meet their capital adequacy ratio needs. All right. So de-stressing of public sector banks are also important. Public sector banks are very stressed because of certain projects in the field of electricity, power, steel, and road sectors. These projects have very long gestation period and they take a lot of time in order to provide some kind of return. And if you remember, there was a scheme which was announced in the year 2016, S4A scheme. Can you please tell me in the comment section what is the full form of S4A? So this particular scheme was announced in order to help the entire corporate structure by restructuring the loans. All right. Flexibility in the restructuring of existing loans, which was provided under this, and also during the COVID-19 pandemic era, in the initial time of it, the finance minister did around some schemes. Please remember it. All right. Debt recovery tribunals, if we talk about this, debt recovery tribunals were established under the, yes, I'm going to tell you about the full form. Debt recovery tribunals were established under the Recovery of Debts Due to Banks and Financial Institutions Act of 1993. And these particular tribunals will speed up the recovery of bad loans of the banking sector. These particular tribunals not only enforce this particular act, but also the SARFAESI Act of 2002. All right, so let's move forward and talk about empowerment. Empowerment in the sense that there will be no political pressure and the banks are encouraged to take their own independent decision, keeping the commercial interest of the organization and the interest of the public at large. If we talk about it, there will be grievance redressal mechanisms for customers as well as staff, so that concerns of the affected are addressed effectively in time-bound manner, and the government intends to provide greater flexibility in hiring manpower. A new framework of key performance indicators, if you have heard about it, the EASE, EASE 2.0, which was a performance index which measured the performance of the PSBs from March 2018 to 2020, was released recently. And it indicated improvement in the performance section of particular banks. You have to tell me which is the second and the third bank which performed really good after Bank of Baroda. According to EASE 2.0, Bank of Baroda was the first bank to show quite a good performance. Alright, so key performance indicators were also introduced. Now let's talk about governance reforms. The process of the entire governance reforms started with Gyan Sangam, which is a conclave of PSBs, and it was organized initially in Pune in the year 2015. There was certain focus on optimizing capital, digitizing processes, strengthening risk management, improving managerial performance and financial inclusion as well. Now let's talk about the way forward. What is the way forward? First of all, it is very important that people within banking, law, finance, and multiple other sectors should come at one table and talk about policies, framing policies which affect the economy at large. It is often seen that asset reconstruction companies struggle in legal battles and are not able to recover the assets. So it is important for the legal way out of the issue as soon as possible, and Insolvency and Bankruptcy Code of 2016 is a step in definite right direction. The banks need to be given more power to discipline the borrowers. The bankers need to be trained in order to skill them for lending more judiciously and more easily to the priority sectors. For the same, legal mechanisms also need to be put up in place, as we have separate commercial banks and separate retail banks. Their merger has done more harm than good. So it is high time we reconsider the separation of the two types of banks once again, so that the general public does not have to bear the brunt of such crisis. So if we talk about the Lakshmi Vilas Bank crisis, this is just a symptom of a larger problem which needs larger solution. Until and unless, then the problems will continue to persevere. So today I'm concluding this segment. Tomorrow I'm going to turn up with a new segment. Until then, stay updated and thank you so much for watching.